is an ETF? An ETF is an investment where you buy a basket of securities. It stands for Exchange Traded Fund. An ETF can track an index like the S&P 500, bonds, a specific industry like the tech industry, and more. For instance, you may believe that most of the 500 companies in the S&P 500 index will do well in the future. Instead of buying 500 different stocks for each of the companies in the index, you can buy an ETF that tracks the S&P 500 index. So when you buy one S&P 500 ETF, you are buying all 500 companies at the same time. Just like a stock, the price of an ETF will rise and fall depending on what it's tracking. Let's use the example of the S&P 500 index again. If the 500 companies do well on average, then the S&P 500 index price will rise. The ETF tracking this index will then rise as well. And if the index drops in price, then the ETF will correspondingly drop as well. Therefore, it is very similar in buying and selling stocks. But instead of buying just one stock or security, you're buying a whole basket of securities at the same time. This method holds significant advantages such as diversification.
What is a Bitcoin ETF? A Bitcoin ETF works in relatively the same way as a regular ETF. Investors will buy shares in the ETF through their brokerage firm and then trade them the same way as you trade shares like Apple shares or Tesla shares. Bitcoin ETFs track the current price of Bitcoin and act similar to Bitcoin's price swings. Moreover, the ETF uses future contracts to track Bitcoin's price.
Why is Bitcoin ETFs important? Now, you may be wondering, why don't investors just buy regular Bitcoins instead? Well, most regular investors believe that Bitcoin and cryptocurrencies in general look too risky. Since there are unclear regulations around Bitcoin and owning Bitcoin requires a Bitcoin wallet and trusting crypto exchanges, people aren't very familiar with how Bitcoin works. To add on, with Bitcoin, all the security and privacy rely on you. It's up to you to be able to keep your private keys safe. However, with a Bitcoin ETF, investors don't need to worry about securing their own Bitcoin. Instead, they can own shares in the ETF just like the shares of stocks and gain exposure in the crypto market without having to handle it by themselves.
How does a Bitcoin ETF work? A Bitcoin ETF is managed by a firm that buys and holds your Bitcoin. The price is fixed to the Bitcoin held inside the fund. The firm lists the ETF on a traditional stock exchange, and an investor can trade the ETF just as you would with any other stock. Bitcoin ETFs also offer new types of trading. You can short sell, where an investor bets against Bitcoin and gains money when Bitcoin goes down.
How is Bitcoin ETFs different from regular ETFs? You get dividends in regular ETFs while you don't in Bitcoin ETFs. For instance, ETFs that track the S&P 500 represent equity shares, where you get a cut of the dividends that any company in the S&P 500 pays to their shareholders. If Tesla pays a dividend and you own an ETF that includes Tesla, you will get a smaller dividend corresponding to that. However, Bitcoin is decentralized, which leads to investors not getting dividends with Bitcoin's ETFs. Just like regular ETFs, you have to pay fees to the company offering the ETF. However, with Bitcoin ETFs, you pay the custody or management fees.
What's so special about Bitcoin ETFs? A Bitcoin ETF in the US will bring new levels of mainstream trustworthiness and acceptance in Bitcoin investing. In 2020 and 2021, companies like Square and Tesla bought Bitcoin as an investment for their balance sheets, which made more people invest in Bitcoin as well. However, many conservative investors see the crypto as risky and a bet.
Future of Bitcoin ETF. In October 2021, The SEC, or the United States Securities and Exchange Commission, approved the ProShares Bitcoin Futures ETF. It is the first one to be admitted into the US financial markets that is related to cryptocurrency. This is a huge first step in the future of trading cryptocurrency.
Key takeaways. An ETF, or exchange traded fund, is a publicly traded investment vehicle that tracks the value of its underlying asset, such as Bitcoin. Shares in a Bitcoin ETF would be traceable on a traditional stock exchange. The SEC has approved the ProShare Bitcoin Futures ETF in October 2021.
Thanks for watching. Do you believe in the Bitcoin ETF?